I'm Tia Borden with MiningIR, and beside me is Nicholas Boyd-Mathews, Chief Investment Officer of Eden Asset Management. Thank you so much, Nicholas, for joining me today.
Pleasure to be here. I've flown a long way from Australia and I'm rather exhausted, but it's great to be here.
Well, you don't look exhausted, and your
Thank
energy
you.
is amazing. So welcome, and I hope that the conference is going well for you. It's been a busy day out on the floor.
Well, I have to be honest with you, the reason we're here, I got invited over because we've been nominated for an award, which was a
That's
surprise.
exciting.
It's the ESG Initiative of the Year award. It is a nomination. The announcement is on, I think it's tomorrow at the gala
Oh,
dinner. So fingers crossed,
yes.
we might be awarded
Fingers
it.
crossed for you.
And the reason we've got the award is because we're the only sort of natural resources fund that's a UCITS Irish ICAV fund that is actually light green Article 8, which is ESG.
Okay.
And what that means is we tend to invest in companies that are natural resources space, but are not fossil fuels.
Okay.
So it's all about sustainability.
Let's dive into it. Can you tell us a bit about your core investment philosophy and how it shapes your strategies?
It's a very good question, and a very important question being a fund manager. And the great news about this is for me certainly, is that the fact that this fund is the same strategy that I developed, and I've been in the industry for over 34 years, but in 2000, the mid 2000s, about 2004, I came up with a UCITS 3, which was the first ever regulated hedge fund that had a strategy of investing in natural resources. And that aim was to produce growth over the long term. We're an investor, we're not a speculator. And that strategy that was very successful back then, we took forward to about 2021, and we relaunched it under Eden, and we tested it with some previous investors. The only difference being from that strategy years ago is we don't invest in fossil fuels. So we're green now, as opposed to back then we would invest in all sorts of naughty investments like coal, that pollute the earth and all that sort of thing. So we're a green friendly fund in natural resources space.
And what's the benefit to being a green friendly fund?
Well, it's nice to do something good for the for the
Environment.
world. I mean, when I first started in the industry in sort of 34 years ago, you didn't mix ethics with investment. That was the wrong thing to do. Whereas it's gone full circle, and we're now actually being responsible citizens, which is great to be a responsible citizen and actually invest in the future of our generation so we can look after this country that we're in. So it's very important. And I think all funds will eventually become ESG. We're just finding our way at the moment, though, so it's taking a while. ESG only came into force on the 10th of March 2021. We became classified on the 9th of March, literally just before it came in, because we had no legacy issues of actually any holdings as a new fund, taking a very old strategy from 15, 20 years ago that was a top decile performing fund to take it to today's market, evolve it into a green fund, if you like, and then attract investors that are looking for sustainability. So that's what we've kind of done. We're at the moment in the phase of actually investing. So we're here at the conference to look for ideas to invest in. And I'll be honest with you, we're struggling. We really are struggling.
What is the struggle?
There's a lot of junior companies here, and the fund that I manage tends to be up to 70% is in the sort of blue chip end, which is very, producers, possibly with exploration play on top, very sensible stuff, free cash flow, all that good stuff, dividends. Whereas up to 30% of the fund we call special situations. So we're kind of a hybrid between a PE fund and a main traditional fund, in that we're looking for those companies that become the next big producers of whatever commodity it is. So those special situations is where I'm concentrating at the moment to get ideas, and I'm struggling. There's lots of them around. The issues that I have is a lot of them don't have a lot of cash at the moment, it seems, and they tend to look very short term, almost band-aid to the next stage. Whereas Eden, we tend to like to hold their hand and look sort of 5, 10 years out. And the idea being is that we're an investor, and then we get co-investors to come alongside to invest along with us, and that helps the company to increase liquidity, and helps with stability, and that's what we aim to do. So the challenge is finding those companies that are looking a little bit longer
term
than sort of raising cash for the next sort of 6 to 12 months. We want to look a little bit longer than that, sort of 5 years out, and that's the challenge.
Now, Nicholas, you have a notable track record for managing the ACD. How do you leverage this experience to guide current investment opportunity and decision making?
Okay, that's going back to the fund I did years ago when you say ACD.
Yes.
Well, that was a top decile performing fund, very conservative, but the idea was to sort of outperform by actually not investing too much exposure to too many of the actual junior end of the market. So, and also looking at things like liquidity, which is a key thing. when you're investing in the junior end of the market, we call it lobster pots or crayfish pots in Australia, which means we don't invest in things that we can't get out of. Effectively, we put the money in and then we're locked in. And if we try and get out of them, we can't. Or the share price just drops dramatically. So we tend to avoid those sorts of things. I mean, I'm not sure if that answered your question, actually.
It does.
Whether I digressed a little bit, but yes.
I also want to know what key advice you would offer, since we're at a mining conference. What key advice would you offer to junior mining companies, to investors?
In terms of?
Based on the current markets and what you're seeing.
Very broad question, that. It's a good question, though, isn't it? What would I tend to do? I tend to look for consistency in management. I would like to see companies that tend to be shareholder focused, and who's on the register and that sort of thing. And I suppose your question is really what advice can I give them?
What advice specific to junior mining and investors
that's a good question.
Looking at junior mining opportunities?
Because I'm struggling to answer that, and that's a very good question. What advice would I give them? I would say adopt sustainability. If I had to come up with anything at all, and it is a good question because it's completely thrown me, I would say adopt sustainability, accept the fact that becoming green is going to be the norm, standardized. It may take time, but if you don't adopt sustainability and recognize that ESG is here and it's going to stay, then I think you'll struggle to raise capital. And when you're in mining and a junior, it's all about the capital, and it's capital intensive. So you need a lot of capital to invest to actually develop, that exploration into becoming a developing mine. We tend to like companies that are at that stage that are pre-fees or going into development as an investment. So definitely the junior end of the market, embrace sustainability. It's here, it won't go away.
Nicholas, what trends do you foresee in the mining sector?
Well, ESG is one of them we've just touched on. That's definitely a trend that started a few years ago and I think will continue. I think you'll see a move away from fossil fuels as a trend. I feel for those fund managers that are sort of oil and gas and coal, that's a trend that I think we'll move away from. I think you'll see electrification, obviously, go ahead in the marketplace, and that's obviously known about at the moment, but that's a growing area. And those are the key trends, I think. So sustainability, ESG, electrification, and the change in the way we act as human beings. We become responsible citizens, I think.
Before I let you go, is there anything else that you would like to share with our viewers and our investors?
I'd like to share. Again, another good question. I mean, nothing really other than be responsible citizens. Look to invest. Don't go for short-term, 10-bagger companies, that sort of thing. That won't make you any money, and that's gambling at the end of the day. That would be my advice. Go for good, sound companies, good management, looking to focus on shareholder returns, and ideally near to pre-feasibility, that they're going to go into bankable, so that you know that there's something that's going to be there at the end of the day. And obviously make it green.
That's great advice.
Thank you very much.
Thank you so much for joining me today.
Thank you.